Hey everyone, it's Julie here with TipRanks. Today we're taking a look at two stocks with unanimous strong buy ratings from Wall Street, but their stock can't seem to stop dropping. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Today, I was taking a look at the daily analyst ratings over on TipRanks, where you can see all of the latest ratings coming in from Wall Street, when I noticed a couple of stocks that picked up some new buy ratings from 5-star analysts. When I took a further look at these companies, I saw that they both have been facing some serious headwinds this past year, and have both declined by double digits. But despite this, they continue to pick up all buy ratings from Wall Street analysts. So today we're going to take a look at these two companies, what's been going on with them lately, and what has analysts remaining bullish on their future outlook. Just before we get into these two stocks, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can also head on over to the TipRanks website right now to get 40% off premium subscriptions for our end of quarter sale. So if you've been wanting to unlock some fantastic research tools, now's the time to do so. Head on over to the website or follow links in the description down below. Now let's jump into these two dipping unanimous strong buy stocks. We're going to kick things off with Braze, a software company that has been on a roller coaster this past year. They trade under the ticker BRZE, currently priced above $37 per share. Overall, in the past year, the stock has declined 25%, and it looked like they were starting to head to the green as they are up over 13% in the last 6 months, but alas, in these last 3, they're now down 12%. Braze is a leading customer engagement platform, helping businesses build strong relationships with their customers through personalized marketing campaigns. Operating in the tech and marketing sector, Braze provides a suite of solutions that enables brands to deliver relevant, individualized messaging across various channels. Their core services focus on leveraging data and insights to create seamless customer experiences and drive engagement and retention. So, why the decline in price? Well, macro headwinds have been hitting hard. Think tighter marketing budgets and longer sales cycles. Customers aren't expanding as fast. Their net retention rate slipped to a projected 110% for Q4. And I know 110% certainly doesn't sound bad, but this was a slowdown from their rapid pace previously. In their last quarterly report back in December, they did come out with both an earnings and revenue beat, but inline guidance didn't wow investors. The company highlighted significant revenue growth and customer base expansion. However, there were concerns over pressure on dollar-based net retention and negative free cash flow. Their next earnings report is coming out pretty soon, as in tomorrow, March 27th, where analysts are anticipating earnings per share of 5 cents, which would be a 9-cent swing from last year's. But if we scroll to the bottom here, we can see how the stock has moved following their earnings reports. And in the last few quarters, that has been in the red. So maybe one to definitely watch and wait and see how those earnings come out. One other piece of news to note was at the start of February, the company announced that their president and chief commercial officer would be stepping down after 10 years in the role. But now flipping to the more positive side on what has analysts feeling bullish for the Braze future. And that has a lot to do with a number of AI initiatives available today and on their future roadmap, which, if they're able to stick to that roadmap, should increase the stickiness of their offering to their customers. Many of the analysts that have recently weighed in on the stock have noted that current levels represent an attractive entry point. Last week, analysts from both Raymond James and Wells Fargo noted that the stock was at a healthy entry point. Then just today, an analyst at Canaccord said that they appear well positioned for growth, but having said that, they feel it's better to wait on results, as the current tape is not very forgiving to companies that miss estimates, as we saw in those past declines. An analyst from Citi also slightly trimmed their price target due to choppy macro environment and some sales leadership changes, but they believe that Braze can reaccelerate growth in the second half of the year. Altogether, the Braze stock has attracted 10 current analyst ratings, all giving it a buy. And their average price target of $53.44 represents an upside potential of 42%. Looking at those price targets down below, on the low end we have $43 for an upside of 14%, while our high-end price target is $70 for an upside of 86%. So some pretty bullish price targets there. For our second unanimous strong buy stock, we're moving to a completely different industry with Permian Resources. Trading under the ticker PR, they're currently priced just above $14 per share. And this is another stock that's been on a bit of a roller coaster, down 13% overall in the past year, seeing some ups and downs, but overall slightly red year to date. Permian Resources is an independent oil and natural gas company focused on the development of crude oil and natural gas reserves. As the company's name suggests, their operations are focused in the Permian Basin with assets concentrated in the core of the Delaware Basin. They include over 450,000 net leasehold acres across the basin, making them the second largest pure-play E&P in the Permian Basin. That's exploration and production. Oil price volatility and a broader energy sector slump have kept this stock in the red the past year. And production costs and market uncertainty have capped gains, but management noted that the company is already realizing lower drilling and completion costs with potential for further reductions. Their last earnings report was just over a month ago at the end of February, and they did come out with a big earnings beat. Earnings per share of 53 cents was 20 cents higher than anticipated. They also saw record production and free cash flow, significant cost reductions, and an effective merger and acquisition activity. On top of that, the company also laid out a promising growth plan for 2025 with increased production and improved capital efficiency. And this has analysts remaining optimistic but also a little cautious for the future. We've had a lot of analysts reiterating buy ratings while also slightly lowering price targets. At the start of March, we did have an analyst upgrade the stock to a buy, saying that they had successfully built scale through acquisitions while making significant improvements in capital efficiency. While the shares are trading at a discount to peers, they believe the recent pullback creates an attractive risk-reward for the name. More recently, we do have analysts dropping their price targets by a couple dollars, one from JP Morgan just saying that they refreshed their exploration and production models. But despite lowered price targets, Permian Resources still has 18 analysts, all giving it a buy. And their average price target of $19 implies an upside potential of 35% from current prices. Looking at those price targets down below, even with the lowered ones, we still have a lot of double-digit upside. Our low end is $14, which would be a slight downside, but most of them 20% and above, with a high-end price target of $22 for an upside of 55%. So there we have it, Braze and Permian Resources, two stocks that have both been facing headwinds this past year and possibly will still face more in the short term, but have unanimous buy ratings from Wall Street. So let me know your thoughts on these two companies, whether they've hit bottom or not. I always appreciate hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock. Make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day. I'll see you back here next time.